Hello everyone, welcome to today's analysis of the NQ and a little bit of related markets. Long time no see. I took a break for a week because, yeah, work was just crazy busy and thought it was best to take a breather. Seemed to line up well with what the markets were doing because we had kind of just a week of down in the stock market, which is kind of nice. I find it's not nice for people who obviously are losing money or whatever, but I had been talking about it for a while, and let's take a look at what I was looking at before. Let's go to the daily. Let's go to the 12-hour actually. So let's get rid of the RTH. Okay, and let's get rid of the oh my god, there's so many few apps. Okay. Back on the 18th of February. Today is Monday, 3rd of March, by the way. Just so you know that you're watching the right video. So back on the 18th of February or so, we came into this 12-hour block. And all the way up, I was talking about the fact that we're building such an incredible liquidity curves to the downside. And that it seemed very edible, especially what the S&P was doing. It was just giving us signs of absorption in comparison to what the NQ was doing. There was a lot of SMTs going on. So, yeah. And there weren't not many levels to long in here at all. It just cut down. Actually, we barely even took liquidity coming down. We just cut straight down into this zone that I had marked. And I do remember saying I will be very, very cautious about taking longs coming into this consolidation. Now this is on the CME. The interesting thing is we did not tap this zone on normal markets, non-CME markets. That zone that we're talking about is down here. We didn't take the liquidity, which makes me think that we could actually get a bit of a relief bounce from here, but now that we have broken larger structure again, this is definitely a crazy change of character that we're in, and now we have nested bearish. This zone is the last liquidity grab that I would consider this range being based within. And we are hovering over massive zones of interest. I've had these things marked up for ages, man. And I remember saying to Andre, like, man, we can come down 15% and it not make a flipping difference, like 13% from this zone. And it's true, like we can, because the last crazy important liquidity grab was this one. We have RTH gaps down here. Where are they actually? Show me them gaps. We have one here. Now it's mitigated 50%. That's why it's actually I made this brighter. That's why it's purple and kind of hollow, but it's still available. We have vector recovery, 12-hour vector recovery, maybe even daily. Yeah, daily vector recovery down there as well. High volume node, 3-day order block, crazy order blocks nested within their volume gaps, the whole shebang. But the real important thing is the sources of structure, and we're inside these breaks of structure and these changes of character. Right now, we are flirting with this break of structure, which was created on Trump's inauguration. I remember it happening. And it was this big expansive move, which is actually based on flat lows. And we have more flat lows lower. Like, guys, look, we could come up, obviously recover some red vector, dance around in here, you know. But, like, excuse me, I'm going to need to see us take the high before I'm, like, macro bullish again, I think. Now, we did kind of struggle to close here. We can dance around in here, right? And if we start taking liquidity and moving up and taking big liquidity and moving up, you know, and like really creating long-term bullish structure from here, sure, we can keep going. But we've come to a zone that I've been talking about that makes me very uncomfortable. And I've been talking about it making me uncomfortable for a very long time. And I'll be damned if you're going to catch me calling for like pulls for all-time highs from in here or whatever, because we can still come into this cluster of changes of character and breaks of structure and have a way stronger move up. Now we can dance around in here. Obviously, we want to build liquidity and stuff, but if we come down into here, like this is the zone that I'm going to start to become more aggressively bullish, naturally, because it's the source of everything, and they're dancing around it, you know, like they're dancing around this liquidity and they're coming right into it, and they can induce it more, obviously. You know, we could put in some higher highs all the way up just to go boom, you know, some huge event can easily bring us down into this liquidity pool. But like this is the zone that I'm really interested in. I'm going to take just a few range profiles. We've a point of control down there. It's okay. What about this one here? Point of control's around here. Yeah, I would like to see these lows get swing failed. And that would be a really nice kind of reset for us to perhaps, you know, properly come up and keep going up on the larger time frame. So anyway, that's my speculation on the 12-hour situation. We have come into this zone. It's a valid pull. It's the last little grab before we had this expansive move up. It is valid. But just know that we can come below 20K and 19,500 and still be within this massive uptrend pull very comfortably, right? Very comfortably. So just keep that in mind. Let's come back now to what's happening today. So we came into this, tapped this 45-minute block just beautifully. Now we did front run that naked point of control, which has me iffy. But we have a change of character and mitigation. Us taking this high and breaking up, I would perhaps actually call this mitigated. Why? Well, I still might keep it like this, but us coming back into here, in the current situation, the current state of things, I'm not a huge fan of us coming back into this zone. I don't have much down here that I can be like, yes, I would like to take a long on this. Partly due to money flow, partly due to structure, mainly due to structure. I just don't like it. I just don't like it. I don't see us coming down here and really not coming for like all of these lows. And then why would they stop at that when they have this below? It's just curve after curve after curve. Now, some kind of news fueled situation could wick it maybe into this volume gap, like a big wick. Obviously not from here. A huge wick. I'm just not super confident on it. I'm way more confident on the bearish pulls, and There's, we have inducement here. We have a 2 minute order block that looks really nice with nice inducement, past daily view up there, high volume node, vector recovery. It's a pull that we broke larger time frame structure. I like this zone for taking a short, something small maybe. But I'm still not like super. Like I could take bullish scalps, but if we start coming into here, like I'm gonna need some real convincing that this area is gonna hold, just because of the nature of it. Now, obviously, things change over time. This area could become stronger, right? It's all contextual, right? Like what they do before coming to this zone, I might change my mind and be like, well, the blocks down here now actually seem like they could give a really good reaction. But currently, I would just be a bit cautious. So we have this change of character, but it is internal. This one is the one that I'm kind of focused on. We got a bounce off there around Tokyo, and we're kind of just dancing inside of here. I feel like breaking up from here before we come down into here is possible. But then if we do, that's building a lot more liquidity for us to kind of eat into. So I'm still kind of focused on the bearish pulls. But I'm cautious just because we did come into, as I said, that consolidation back here. We took external liquidity. Technically, they can now come for this weak looking structure above us. Not necessarily weak, but a bit iffy for holding anybody in shorts from these zones. I like if I was in a short from these zones, I would feel kind of uncomfortable, right, with them, just because of how kind of flat they are. Right now, any shorts I would take from inside here. There is potentially a crazy short to take from this 4-minute order block up around 21,421. Whether we come there or not, I don't know. US can be crazy. I just have the levels marked. That being said, if we do gain structure or gain support down here and start making our way up to recover this drop, we do have a lot of zones to come into. This drop was very kind of square. They left a lot of kind of blatant liquidity targets to come into that they could easily swing fail and continue the pull, the bearish pull, right? So it's Monday. I'm going to let them do what they do on Mondays and show me a fake move, show me expansion, show me continuation, show me something. But this zone down here, while it is valid, and I would maybe take a couple of scalps depending on the liquidity that we take coming into here or the reactions we get, I'm not overall really happy about it. I'm not super happy about this. I feel like we could take these lows. They just feel like they could get taken. If I was going to take a long, I guess somewhere in structure, like somewhere in this zone here, I would be more confident if I saw strength take over. I would like strength to take over higher in this situation. See actual demand come in higher, instead of coming all the way down to like 25.50 and dancing with that. Like, I don't know. I wouldn't take a short from there, or sorry, a long from there. So I mean, there's a chance that this mitigation that Tokyo did today is enough to bring us farther up into the liquidity above us. Definitely a possibility. Just because they can move up from here doesn't mean that I think this is strong bullish structure, right? Like they can just short squeeze. And hey, if you're a scalper, you can catch some of those short squeezes. You know, there are valid pulls here. We had internal break of structure. This was internal liquidity taken. It's kind of ranging. The only thing that I see that's pretty nice for a continuation is this mitigation of the fair value gap. then, you know, bullish structure, and also we have an internal SMT on the ES here. So ES took Asian liquidity. That's okay. That's not the worst. It didn't take the low, and you know, we have Sydney's high up here. It's a bit iffy. It's a bit this local zone right now is a bit like kind of it can go either way. Yeah. So I don't really like Mondays, especially after moves like last week. It's kind of like I don't feel secure in a direction, but I could maybe take one or two scalps. So we'll see. I have my zones ready, and that's most of the game, right? Just being ready with levels and seeing if they react and all of that. You know how it is. So that's kind of it. I'm much more confident about taking trades based off the levels above me than I am below. If we start breaking down, you're not going to catch me longing the knife, because that knife could be a big one. But we did have a bit of a scare last week, so you know, having a relief rally is it's also kind of to be expected a bit, right? Yeah. Let's take a look at other markets. Gold did actually. I was here, and I was like, I feel like they could have another cycle and distribute up here, and that's what they did. So they distributed here, and now we are after breaking structure and coming back in. Gold is still relatively strong though. Like relatively. Would like to see some support come into here. If support came in and gold started continuing breaking highs, like I would be a bit cautious about the stock market. But it seems like the stock market could get a bit of relief just because you see this on gold, and the yen has also started to kind of do some local distribution, which is, you know, it seems like we could get some temporary spikes in the stock market soon, potentially, which would make sense. You know, like there's liquidity here to be taken. You know, this is kind of free reign for them now. Like this whole zone is free reign. So might be interesting. They might range here even more. Maybe. Let's see. Let's see what they do. We have RTH gaps to the upside as well. Slightly. Small gaps. Very, very, very small. Mostly filled gaps. So we have one here, 21,400, but it's kind of basically filled. We have nothing really after that. Everything is below us, around 20k. So yeah. We also have this weird one up here, around 22,400. But you know, you can see they're light purple, which means that they're 50% mitigated, which means you know they could take it or leave it. Yeah. Okay, that's it. That's what I see. I hope it helps. I'm back, and I will be for the foreseeable future. My new schedule is Monday to Thursday. No more Fridays. So I'll be doing Monday through Thursday, NQ analysis every damn day. All of them days anyway. And yeah, I might do some live streams as well. So if you're on the server, please feel free to join. You can ask questions and all of that good stuff. And yeah, happy trading, and we'll see you tomorrow. Peace, guys. Bye.